Andrade joins us, and it's a while we've not spoken to him. He's just been busy managing money, finding ideas, and on road shows. So nice to have you back, Kenneth. How you been, my friend?
All very well, Nikunj. Nice to talk to you again. How have
Kenneth,
you
Kenneth,
been?
where are I can only see a grey mustache. Is that age or is that wisdom?
Hmm?
I can see just a grey mustache. Is that age or is that wisdom?
I put it down to experience.
So, what is your experience telling you? I mean, have markets peaked out for a long time? Are we in for a long winter?
It depends upon how you categorize long. But I definitely think we've had a great 5 years, especially after the pandemic. And I think all of us need a little bit of a breather, including the marketplace. So hopefully, what I set in at the beginning of this calendar year continues to consolidate, and some of the froth needs to get out of the system. There have been too many excesses that have been built up over the last 2 years. So I do hope that this consolidates well around this place.
Would be the out of jail card, Kenneth, for the markets? Could it be Fed? Could it be something on tariff? Could it be budget? Or could it be pure earnings?
It it's going to be a multiplicity of everything, and just purely by historically being around for so long, it's going to come from a place that you've never seen before. Okay, or you haven't anticipated also before, and I think that's what you can't look out for. The obvious parts, the obvious signals remain valuations. The obvious last quarter and this quarter, the uh, the frequency of data in India has not been too good. You've got an economy that's purely running on government spending. You've got the bottom end of the 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 lending book, which is not doing well at all. So you have some issues at the bottom end of the population structure. You've got the world's largest accounts for 65, almost 70% of the world's market capitalization, unsustainable completely. Uh, so, uh, and you got new ecosystems and new leaders across the world who want to protect their asset markets or their economy. So there's a lot of things happening, and the markets are not exactly cheap. So which is why I say 2 years of being at the same place is not such a bad idea, because in 2 years, even if you grow single digits into the next 2 years, even if you grow single digits earnings, at least you're giving them the market a breather for earnings to catch up, or price earning multiples to catch up, not price earning multiples to catch up.
This year's budget, Kenneth. I know you'll say budgets come and go, but this year's budget, could it be different? Because it's coming at a time when, in general, the market would lean on to budget for something different and original and something which could kindle the growth.
What can we do about it? I mean, I think from an economic standpoint, you can cut tariffs here and there. You can you can cut taxes here and there. You can try to get consumers to spend by putting more money in their hands. But those are things that you can deal with in the short term. I think in the longer term, in the longer term, if you I think in the longer term, if you have to take market share away from the rest of the world, or if you have to grow your market share in the rest of the world from say 3% of global GDP to 5% of global GDP, you've got to incentivize your corporates to do a lot more, to invest a lot more. And one thing that we haven't seen is corporate capex. Corporate capex refuses to return. So I don't know what's going to happen in that direction. Certainly, there is no noise around that, um, um, but we'll have to actually go out and see what the budget does in that specific arena.
Are markets Will markets get disturbed if there is a change in LTCG or STCG? Do you think that could spook the markets? Markets are just not prepared for it. Last time they digested it, but this time they'll throw up.
Well, this I don't think that will be a reason for the market to correct itself. I mean, if LTCG gets increased or even the short-term capital gains comes higher, yeah, this is something that we'll have to deal with going forward. It doesn't mean that's the end of the asset class. Right. So I don't think it's going to be a significant needle mover. It's definitely a sentiment. It will definitely affect sentiment big time. But I don't think it's going to be a big needle mover from that perspective.
It needs to stay at the projected level. I mean, there is an absolute no if it goes this way or that way, and the assumptions for next year should be very reasonable.
I'm actually from an event perspective. It's just another event that will go through. So I just take it as it comes. Whatever comes in, we'll have to recalibrate ourselves to see whether it's material in the longer term context of the economy. Um, but uh, but I but let's talk about the budget post the event actually happens, and that's essentially you will have more granular details at that point in time rather than second guessing what's going to come through.
Now, the general belief in the market is small and mid cap stocks have corrected, but they're still bloated. They need to shed some more weight. And there's a time when you, in a sense, were managing a lot of small and mid cap funds. What is your view on the small and the mid cap cycle? Not everything is great, but not everything is bad also.
No, I don't think anything is terribly bad except for the fact that you built in too much expectations from this category. And I mean, you go into any part of the world and any market cycle that you've seen. If you throw money at a problem, the problem doesn't solve itself, right? And that's essentially what's there. You've taken valuations up, and you continue to get money into the same category again and again. So you're creating a problem, which is you have a problem and you're creating a bigger problem out there, which is essentially valuations. This is the most vulnerable part of corporate India, which is the small businesses. And you look at it from a management perspective, right? If a company which is making say between a I mean, I'm just putting a number out there, and I don't know what the number could be in real time. Making a 30 to 50 crores of profitability for the last 4 5 years suddenly gets a market capitalization of 5,000 to 10,000 crores, which is what they're getting at this point in time. Uh, not too many managements can not too many managements can scale the business to deserve that market capitalization or that value. So that's where the mortality risk actually starts building up. So I think we should take it easy in that category a bit. I mean, you can identify your companies and keep, but you should have the patience, and that's the most uncommon part of. I mean, that's something that an investor just doesn't have in today's environment. Even after the correction, I have come across a whole host of investors wanting to know what's the next best stock, what's the next best fund to actually invest in. Give it some time. I think it's time to identify your companies, identify the funds that you want to invest in, and be prepared to pick the opportunities as they come.
You know, you've always looked at multiple themes. You know, I'm just going to bring this point out for our viewers that, you know, Kenneth was one amongst the many who bought a lot of capex stocks right before the cycle. You've identified, you know, a lot of great companies purely when the dynamics are changing because of market competition or because of the, you know, operating leverage factors. Where do you think next 3 years could be significantly better than what markets are assuming? Because if markets are assuming something, it comes like that, you will not make money. Great gains are made when you assume a template and then you get surprised on it positively or negatively. Where do you think we are in for positive surprise according to you, which markets have not figured it out?
So it's very difficult to pick a space where I think profitability will expand disproportionately. Now, you make large amount of money if there's a non-linear growth in an industry size, or a non-linear growth that a company is going down that entire path, and it's very difficult to come up with ideation around that path. Uh, some of the names that we hold, or one of the large industries that we hold, is essentially in the pharmaceutical space, right? And these are all businesses who we think have got the right to win. When I say they have the right to win, the supply chains are established. It can't be moved. We are the lowest cost producer in the world because we own the supply chain ourselves. And more critically, we've got a significantly large market share across the world with a lot of cash on balance sheet and post capex. And so we're ready for probably the next leg of growth that is already out there. Aviation is another business, and airlines is another business which we're looking at it very interestingly, and so is transportation as an entire basket. And we've got a couple of companies out there who established a business model and cash flows and profitability that we can build into the future, even if they expand their market share by 100%. I think that's the second leg of it all, and the third one is is already a fairly well established business in IT and IT services. I think there, even if we maintain, and it's a fairly mature business to say that these companies will grow at mid-teen levels or low-teen levels, I'm not even going down that path. I say even if they do a great single-digit growth levels from here, which I think they potentially can, or they will, you can get margins which are trending very favorably to these companies. So low single-digit growth high single-digit growth and mid-teen margins. I think these are three spaces that are there, which we think are great. The other ones, I would tend to believe, but I don't know when the cycle will reverse itself, and we've been maintaining this for a while. Is the commodity space, is the metal space. A lot has been said and done, but the net result is that these are the lowest cost producers, or they have price advantages or cost advantages, and now we've got significant scale too. So that's where I encapsulate a certain amount of where our portfolio is positioned right now.
Kenneth, I have two more questions. One is that there was a time when you said that I will not buy financials. And that in a sense was like the big call, which was a differentiated call, but I'm sure you must be booed by investors saying that how can you avoid the performing sector? Financials have now corrected, have not gone anywhere for 3 years. In hindsight, it's turned out to be a great call. But is it now time to say that, look, nobody likes them, so I might as well start buying them?
Well, we don't typically look at it that way, and I just also go back a little bit in history. When infrastructure started doing badly in 2000, when infrastructure did well till 2008, investors had an overhang of this sector till 2011-12, and the next time you heard about that business actually turning around was 2020. So sometimes business cycles last extremely for an extremely long period of time, and we'd have to be a little careful about valuations versus a significantly structural change in that industry, right? And right now valuations are nice in terms of in financials.
I'll wrap it up with one basic question, Kenneth. I'm asking this to everybody. I asked this to Ramdev. I asked this to Bala when he came in the morning. And the question is for a larger audience, which is, everyone has some exposure to mid-cap, small-cap stock. And stock prices have come down. So what should one do who has a mid-cap and a small-cap exposure? Get out, raise cash, double up, or move to large cap? I've lost you, my friend.
That cycle whenever it's right.
No, I just lost your point, Kenneth. I'll have to request you to, perhaps repeat your golden words again. Indeed, golden words, right?
I said raise cash from this category of stocks.
Okay.
Park it aside. Use every volatility to come back into the marketplace.
Your view is that downside or volatility in some of these stocks is not over, and one should also not get carried away with this whole mirage with a lot of people are paying that okay, mid cap is over permanently, large cap is where the store of value is. You still feel that raise cash, buy them, the category will come back.
Yes, the category always comes. So let me put it a little differently. We've had a week of volatile markets. Almost the last couple of days have been reasonably volatile, right? So you'll have days like this where you'll have a massive bounce back, and you'll have weeks like the last week where you will have businesses getting trashed. Okay, so every time the marketplace bounces back, I think you have to go back and revisit the ideas that you bought and wait on the sidelines. Create a portfolio that you would like to own for the next 5 years, and every incremental opportunity that you get, you put your money back into the same names that you've held on to.
Okay. Kenneth, such a pleasure to have you back, and I certainly hope to see much more of you on the channel going forward.
Surely. Thank you very much, Nicholas. Good to be on as always.
If you like this video, then like, share and subscribe to ET Now.